Well, that's a nice lead into our Tax Tip Tuesday segment. Today, we're joined by tax professional John Saylor of Total Tax Solutions to discuss some common tax deductions and credits that people often miss and how families, students, and homeowners can maximize those savings and avoid leaving money on the table each year. John, welcome back to the news desk this morning.
Hey, good morning, Jay. How you doing?
I'm doing well, thank you. So John, why do so many taxpayers miss out on credits and deductions they actually qualify for?
The biggest thing or the biggest reason why people are missing out on credits and deductions is because they're potentially the software they're using isn't answering the questions for them, isn't giving them a deduction because they're asking the wrong questions. So the biggest problem is that I see is when people come in and have me look at their taxes is, well, you didn't even prepare it correctly. Well, this online program, TurboTax, H&R Block, these online programs where they're not in person, they're the ones that are, well, I did it and they said it was qualified and I could email or I could e-file it. But the problem is it's not asking those generalized questions of, hey, did you work in a tip industry? Are you over 65? Are just different things out there that would lead into open-ended questions leading into other credits and deductions that they actually qualify for.
Okay, and so the biggest misconception that people have about like not earning enough to claim some tax credits. How about that?
Yeah, so that's the other thing is like she was just talking about earlier too, is you got to meet these certain thresholds and stuff. So to get the earned income credit, you have to earn certain amount of money between, $0 and up to I think it's 45,000-ish, somewhere in there, depending on the number of kids. And there's a lot of different qualifications and stuff. And that's where some of this online software just isn't asking those questions, but they're missing out on potential credits. One I just did a tax return the other day and a gal forgot her 1099. She didn't want to report it because she thought, well, you know what, I'm going to get more earned income credit because my earned income is less. It's actually
Hmm.
works against her. So I told her, I said, you need to go back and get that 1099 because you actually get $2,000 more of a refund by claiming that $12,000 1099. So it can work for you and against you, but there again, the software would have never asked that question. That's just me doing my due diligence and saying, hey, last year you had this amount of income. What happened? So yeah, that's
Okay,
the misconception is that just because they file, it's correct.
yeah. Who is most likely to overlook the child tax credit, especially after recent law changes?
Just about anybody is likely to overlook it. Most people don't know that it increased by $200. $200 is not a significant increase that people need to pay attention to. But a lot of them are just like, well, my kid's at college, going out to UND, NDSU, so I can't claim them. That's not true. You can still get the other dependent credit. You can still get the education credits. It's all depends on how it's going to benefit to where to put that child on the tax return. Because if the parents make between 150,000 and 200 or 150,000 to $180,000 of adjusted gross income, the education credits start phasing out. So even though they can claim their child, there's times that I'll put the child on their own and not a dependent of another so that they can get the full $1,000 education credit. But the parents are like, well, yeah, but then I miss out on the deduction. You're only missing out on $500. Your child's getting 1,000. Your net profit of $500 right there alone, just on that one credit.
Hmm. Sure. Okay, dependent care credit for working parents, and what expenses are commonly forgotten on that?
So a lot of times, the parents think that they have to be at a child care provider and they have to fill out a W-10. They have to get a statement from the daycare provider. Yeah, and a lot of that is true. The problem is you can also claim it for any after-school programs. You can claim it for summer school programs. If you're paying someone to watch your child, all of that is tax deductible up to $3,000 per child. So and then some of them think, well, my one child only went this long and this long. But there again, you could take up to $3,000 per child of child dependent care. So sometimes they just think that, well, they don't qualify because they're with BPS or whatever, and we don't get any information from them. Well, you could still deduct whatever you pay for that.
Why is the earned income tax credit one of the most underclaimed credits in the tax code?
Because people don't know how to qualify for it, and there's a lot of due diligence questions that we as tax preparers have to ask. And if any one of those questions are a no or a yes, and they should be the other way around, it disqualifies the earned income credit. And some of these people can earn up to $4,000 of earned income credit. So a lot of it is the due diligence questions where they miss it, they think they don't qualify. Well, all it is a simple yes or no was answered wrong, or they read the question wrong and it was just inadvertently put down as the wrong answer, and it disqualifies them from it, even though they are fully qualified to get it.
John, is it true that those filers claiming earned income tax credit won't see a refund until at least March 2nd due to identity, I guess they're saying identity verification and fraud?
Yeah, so I just had one of these yesterday, Jay, where a tax return got rejected because the two social security numbers for the dependents has already been claimed on another tax return. So basically, what we do is I alert the parents, the taxpayer, and let them know, hey, your return's been rejected. This is why it's been rejected. Okay, what do we do now? All they need to do is go to the irs.gov website, apply for an IP PIN, an identity protection PIN, and then we put that in with their tax return, and all of a sudden their tax return will immediately get accepted, and then the IRS determines, okay, who's rightfully able to claim these two children? Is it the
Hmm.
taxpayer now, or is it the taxpayer that already claimed them and stuff? So there's some different things that we can do to make sure that you still get it. But yes, you're correct. I mean, they're processing tax returns with earned income credit right now, a child tax credit, but none of those refunds are going to hit anybody's account until starting March 2nd.
Okay. Let's talk about income or life changes like gig work or even part-time jobs can expectedly make someone ineligible or even eligible for tax credits.
Yeah, just the example I said earlier. She wasn't going to claim the $1,000 a month that she made for doing odd jobs and stuff like that with one employer. And I told her, I said, you need to go back and get that 1099. And the employer said, well, I thought you didn't want a 1099. Well, no, I need it because that showed $12,000 more income earned on her tax return, and it
Hmm.
actually went in her favor to get an additional $2,000 back on the earned income credit. So there again, it's not necessarily knowing, hey, is that claimable money because I just do it every now and again, this and that. Every dollar you make is basically claimable on your tax return.
So, how do people choose between the American Opportunity Credit and the Lifetime Learning Credit?
So there's some big differences there because the American Opportunity Credit can be used for 4 years of qualified tuition paid. So if they pay $10,000 at Bismarck State College, but they got a $7,000 scholarship, they really only have $3,000 of qualifying expense. And that's the same with the Lifetime Learning Credit. The only difference is the American Opportunity Credit has a $1,000 fully refundable credit, where the lifetime learning credit, the amount that you get back on the lifetime learning credit can only reduce the tax you owe. There's no refundable portion of the lifetime learning credit. So the AOTC, American Opportunity Tax Credit, is the better credit to use. There again, there's due diligence questions that you have to answer to qualify for that. And there's basically four questions that qualify you for that. If not, you could qualify for the lifetime learning credit and still get some kind of education credit.
And for those parents, what education expenses qualify that most families don't realize count?
So on the lifetime learning credit, utilizing the 529 plan, their distributions from there. The American Opportunity Credit is qualifying tuition, books and fees, supplies, anything they need to finish their or help out with their education year. All right. Now, that does not include room and board. Some of the other credits do allow for you to use room and board as a deduction to reduce
Hmm.
the amount you owe on, like the distributions from a 529 plan, a college save plan. So some of the missed ones are the books and supplies is a big one. People just don't keep track of them. then they're like, well, I bought that book for $100 off of Amazon, or I bought it on Marketplace. It still counts towards a credit, and it still counts towards that $4,000 limit. So yeah, it's there. Some of the kid or some of the people just aren't keeping track of the receipts, but it all adds up.
Yeah, you bet. Okay, energy efficient appliances and upgrades. Do they currently qualify for tax credits?
Nope, they disallowed the or the energy credits for 2025 and 2026. There's a couple other residential energy credits that I think are still out there, but there again, the qualifications for it, and then it's a percentage and stuff like that. So it's best to talk to a tax professional to find out what does qualify for sure for that credit. Electric vehicle credits went away. There's just a number of different things that either went away, but then there was a number of different things that actually picked up. And the I just had one yesterday, a brand new car purchased in 2025, and can utilize the or deduct the interest that they paid on that new vehicle from 2025. They qualified for it and got I think it was about $580 of interest they paid on that loan that they got to deduct from their tax return.
Okay. And finally, what is one question that people should be always asking their tax preparer before they're filing?
The biggest thing they need to ask the number one thing is ask questions. If you're sitting in front of your tax preparer, ask all the questions you can. If you go and you pick up your tax return, ask questions. There's no wrong question, there's no right question. Just ask questions, because as a tax professional like me, I have no idea what happened throughout the year for them. If they purchased a car, if they adopted a child, if they have a foster child, if they bought a new car, if they got tips that were reported. Just the biggest thing is ask questions. I try to say stay away from the software because there's no chance to ask questions, but ask
Hmm.
questions. Sit down with your preparer face to face. If you can't sit down with your preparer face to face and ask questions, you are with the wrong tax preparer.
Yeah. Okay. Well, let's talk about a right tax preparer, Total Tax Solutions. How can the folks watching maybe get a hold of you? Maybe they got questions. Maybe they want their taxes with you, a sit down one on one. How would they go about doing that?
We've had a lot of new clients schedule with us, and basically, a lot of them are either calling in to the phone number, calling in at 498-1829, or they're going online at www.totaltaxnd for North Dakota.com, and you can click the schedule now button, pick your preparer, 2025 tax preparation. Our schedules pop up, and whatever works for you, you go ahead and you pick that day and time. It reserves a spot and emails you a confirmation that yes, we will see you on that day and that time for an hour at least to go over your tax return with you.
John, I know you're up to your elbows in work, but I've got good news for you. Pitchers and catchers just reported for training camp.
I mean, how excited is it? You just when I hear that, you just know summer is right around the corner. Spring ball is right around the corner, and I'm excited too because then I get to get back out there and do some umpiring with the junior varsity, the varsity, the college level, the summer legion baseball. I get excited. I love baseball, and I love to be a part of it and stuff too. So, but first things first, we got to finish all these tax returns first. So.
Yeah, absolutely. April 15th will be here before you know it, pal.
Yep, and keep in mind for any businesses out there, your S corps and partnerships are due by March 15th. March 15th is the deadline for partnerships and S corps.
Okay, so you got about 5 weeks there to get that in as well. John Saylor, Total Tax Solutions. Johnny, it's always a good to see your face, my friend.
Yeah, and it's always good to talk with you there at KFYR, Jay. You do a great job. It's always a pleasant when you pop on the screen and I'm like, hey, I know that guy.
Thanks, buddy. I appreciate it. We'll catch up with you again next week, okay?
Sounds good, Jay. We'll see you next Tuesday. Tax Tip
You,
Tuesday.
you bet. Bye bye now. Minute past the top of the hour. We'll take a quick break here at the news desk. We'll be right back on KFYR Plus.